Hello, everybody. Thank you so much for joining. Hope everybody is doing well. I will save you my face today. I'm a little bit under the weather and I'm still traveling, but I'll be back at base hopefully tomorrow morning for DCA on my channel with Ivan and CTO. Anyway, this will be a big and long and complex Q&A, so stay alert and go grab a coffee. There's some good little secrets in here too. So let's jump in. As we always do, we're going to be talking about a lot of stuff. We're going to be answering all the top questions. Of course, anything I say will be edutainment, not financial advice, just things I do and how I view the markets. And all the questions come from Patreon. Huge shout out to everybody in Patreon for bringing such amazing questions every single week. They make me sharper. And in fact, one of the questions, I've been working on this for the last 3 days. One of the questions made me uncover a new secret to pair trading. So super impressed with this. Not only does everybody here get smarter, but I get smarter too from the questions. Now, first question is from Jonathan Krimko, and I just saw Dog One out there having a question regarding this, and that is, if this time is different, institutional money coming in, declining Bitcoin balances on exchanges, and possibly for the first time, absolute scarcity having an impact on Bitcoin price action, then how can we be confident layering out of such a unique asset when no one has ever seen the impact of absolute scarcity on the price of an asset? Would it not be safer to see where Bitcoin peaks and layer out on the way down, or just hodl Bitcoin and buy large corrections during the bear market? This is a brilliant question. I think about this all the time. I've been obsessed with this for the last 3 years in particular. Last bull run, I had like an 89K target. I was the lowest target on Bitcoin. And of course, due to manipulation and everything else, we didn't make it, but we got real close. And the question is, close is not good enough. And that's why we built things to address those weaknesses. So let's jump in and talk about some of the things that are happening right now in the space. First of all, institutional money. Yes, there will be a huge influx of money into this. And a couple of things related to that. One is it shows you how mature the asset has become for Wall Street to trust Bitcoin. It's no longer what the government officials will tell you, oh, it's just fake, it's magic internet money, it's used by drug dealers, etc., for human trafficking. No, that's not true at all. But it has much more increased stability and liquidity, which is great. There's also a lot of options as well to be able to protect risk, manage and hedge, etc. And institutions, the typical players that work with the likes of BlackRock have different goals. Their goals are to help find alpha for things like pension funds and large clients. The other point you mentioned regarding declining Bitcoin imbalances, I've been talking about supply crunch for the whole year. I back it up with data and on-chain data, and it shows you that more holders of Bitcoin are hodling for the long term, and they are not selling. They did not sell during the bear, and they certainly are not selling before the halving, and they certainly are not selling till it reaches a certain point, and whatever that is, I don't know. But it's important to consider as well other things that impact that too. Also, regarding absolute scarcity, like literally, I've made many videos on how 5 million Bitcoin are lost. They say there's 21 million. Really, I believe there'll never be more than 14 million because every day people still lose their keys. Even professional fund managers lose their ETH. It's unbelievable. It's such a clown world out there. But this is going to have a huge impact, and this will drive prices up. Now, if there is a constant flow into Bitcoin from these big spot ETFs, etc., pension funds, price could go up indefinitely, and I am prepared for that. So the options, you kind of nailed them. First of all, layering out is one option. Yes. The other one, and mathematically, we've proven that even layering out, you don't leave a lot of money on the table, which is great. And we've shared many models, and we have a spreadsheet for it that works in conjunction with our TradingView model too, designed exactly for this reason. Profit taking is important in investing. You do not make anything until you sell, ladies and gentlemen. Also, option number 2 is nailing the top is very hard. I focus hard on nailing tops and bottoms, and you've seen my actions over the last year or so and the type of stuff that I've done. like I call it running into burning buildings when things are super oversold. Think Meta, think Tesla, think Solana. I literally pulled every penny I could find and threw it at these things when they were so cheap. And that pays off huge. And that's important. Now, nailing tops. There's many things that you can do there as well. We've built a model for that also takes into account whether or not like exactly the actions of big money on chain. It's all on chain driven. We can tell what's going to happen if a top is coming, because we've got like 19 indicators that tell us, okay, these are top signals. Let's bounce. Let's get out. And I'll share that with you all as well. So don't forget to subscribe for that information. I have no agenda but to help others. Remember that. And then finally, the other strategy is hodling and buying corrections. So a lot of people, you know, I've been urging people since 2017 to be a whole coiner. If you've got 3 kids, get 3 Bitcoin. Back then it was $3,000 a pop, so it was a lot easier. But nowadays it's becoming more difficult. But the other strategy could be something like hold half, sell half, or hold it all. And if you continue to having cash inflow, you can buy corrections as well. So the whole thing is, we're not sure where this is going to go, but we do have a model. TABI is engineered. This is the TABI model. It looks really simple. You buy in the blue, the light blue, the green, maybe a little bit in the yellow. And then when it gets to orange, you stop buying. When it gets to red, you think about selling. We will know if it's time to sell, if it's time to layer out, and how we do it. Thank you so much, Ski Boy. So the supply crunch, literally, this is built to determine if that's there. Imagine there's a situation where, let me see, 5 billion is coming in every month or even every quarter. That will eat up the supply no matter what the price. This is so scarce and we are so early. It's amazing. But this can tell if the buying pressure will exceed the selling pressure. And that's how simple it is. So there's no hard and fast answer to your question, Jonathan, but we are prepared for whatever comes. Thank you for the question. And it's going to be an exciting 18 months plus, and it could go on forever. Who knows? Next, what is a good pair trade for Solana? Is there another crypto that fits the bill? This is from Big J. So the favorite pair trade that I like is SOLETH. It's magical, but it does move in certain ways. So if you look here, this is the new ATR model, which after 13 months, it's coming out of beta tomorrow. We're excited about that. But this has a 96% win rate. But remember, when things go parabolic, either to the downside or the upside, let the trend keep you in the trade. When things are orange, that means you do not buy. When things are blue, that means you do not sell. You stay on the train. And it's that simple. So we look at the rampage on SOLETH over the past couple of months, couple of weeks. It's been insane. But there'll come a time where ETH comes back, perhaps. We're not sure. So remember, when it comes to parabolic runs, the trend keeps you in. And that is kind of my favorite pair trade right now. But we'll see. And I'm waiting for a certain level, which looks like it may never even happen, to flip more ETH into SOL. And it looks like it keeps on escaping. Now, there are 3 huge asset managers that have filed for spot ETFs for Ethereum. That will change the Ethereum game. So watch this space as we go forward. But even after the ETH ETF is positioned, I do believe a Solana ETF could follow too. Next question is from Mints97. This is the question that actually made me find a little bit of a breakthrough. And first of all, this is complex. So I want everybody to focus hard here. This is going to uncover a couple of key things. And again, as I said, pair trading is my background. Everything is a pair. Think in terms of pairs. Don't think in terms of dollar Bitcoin. Think in terms of, say, Bitcoin ETH or Tesla, MicroStrategy, or whatever else. Everything is a pair. Forget the dollars. Think hard assets. Now, Mints97, first of all, thank you for being here since day one. I love it. We're going to talk about some magical stuff. And I can't believe I think I'm 30 videos away from being 1,000 videos and nearly 3 years doing this. So thank you all for coming and for being part of Patreon too. Let's look at one thing first. Now, you mentioned how you've got a big bag of Binance and you want to move to something else like a Bitcoin proxy like CleanSpark or MicroStrategy because you feel it'll do better. How do you do that? So let's look at the Binance versus MicroStrategy and correlation. Now, what I've done here, the top line, as you can see, is gold is MicroStrategy and blue is Binance. You can see MicroStrategy has outperformed Binance, okay, for the last 2 or 3 years. That's pretty clear. What is interesting, though, at the bottom, you see the correlation between these two. And remember, take your time on this one. This is kind of complex and going to get more complex, but it's also magical when you get it. You can see here, there are times when the correlation is 0. There's times when it's negative, but most of the time it's kind of flat. If you look at the whole of 2022 to nearly March 2023, Binance and MicroStrategy were completely in sync. Then that broke down around March and fell to July and kept on falling till August. And then it rebounded. But the point is, it's better for pair trading to have more deviation. We don't like flatness. We like deviation, not a lot. Now let's look at the other one. This is Binance versus CleanSpark and correlation. You can see here, I added the green lines to indicate the correlation and how there's no deviation for a long time, and how with Binance versus CleanSpark, there's a ton of deviation on the correlation. You can see here as well, Binance has held up a little bit better over the years, but you also have to bear in mind that CleanSpark issued a lot of stock to buy rigs. That's how they scale their hash. They didn't take on debt. It's like MicroStrategy issuing stock to buy Bitcoin. It doesn't affect the shareholder because they're getting value back in an indirect way. So bear that in mind. But you can see here, okay, we've got more deviation from the correlation. Therefore, it's better for a pair trade. Now, let's look again at the ATR model. This is Binance divided by MicroStrategy as a pair on the ATR. You can see here the back test. It only wins half of the time. That's not good enough. I want to win 80% of the time. That is kind of my benchmark. Otherwise, I wouldn't touch this pair. And this is the augmented trading range, which shows you the trends. Down, orange is bad, blue up is good, the buys and sells, etc., etc. And you can dial this in to whatever you want. But you can see here, it's difficult to win on this particular pair. Now, if we look at Binance CleanSpark and the ATR, here you've got very clear buy and sell signals, very clear trends up and down, and a win rate of 79%. And this is far better than the 49% on Binance MicroStrategy. So the key thing here is, number one, you look for things that have deviation, and then you have a model that tells you when to swap the pairs, buy, sell, which means you move from Binance into CleanSpark and CleanSpark into Binance, like clockwork. That way you can reduce your bag size and increase your bag size too. So you can reduce your Binance and get more CleanSpark by playing this pair. Now, in summary, again, you need that deviation, okay, and convergence. This is the whole penny drop here for me over the last couple of days of how you can use this model to determine when to do it, and this one to identify when it's best for which assets. So the strategy is based on, again, the spread between the two assets. As one asset outperforms or underperforms more than usual, it'll eventually revert back to its mean. And that's what we saw as well. Now, there are some things that big macro trends, again, you can see here, Binance over CleanSpark. On the whole, Binance has done better, but CleanSpark has rebounded. So that's key for you to watch as well. And the best pairs for profits are those with the most deviation and convergence. So I hope that helps. I would focus on the Binance CleanSpark pair, and that'll help you time it. So thank you for the question. Next question is from IA Fan. The name is very embarrassing for me, but thank you so much. I'm 23 years old, living in Australia, debt-free. I make $150,000 a year, own a Tesla, and 2 properties. One is paid off. The other is looking to be settled in 2025, like paid off, I assume that means in 2025. I have $30,000 in a super, which is like a Roth IRA, but nothing in shares and stocks. And I should have invested in January, but I was scared. Trust me, you're not alone. A lot of people were afraid to jump into the burning building, but as you saw, it pays off royally. Anyway, water under the bridge. I have around 50K in the bank, and considering my situation, would it be fair to go all in on Sol at this price? Oh, well, Sol is exactly $60 right now as we speak. It's up 500% for the year. But before we get into that, I do want to congratulate you on, first of all, being so young. That warms my heart. So put together. You're making a ton of money. You got 2 properties. You got a Tesla. And you know how to invest. So you're going to go very, very far in life. And you'll be easily retired, probably by 30 years of age. So well done. What I would do, never, ever, ever go all in on one asset. That is dangerous. If it blows up, you lose your wealth. Okay. So I believe in very high conviction in very few names, but I also like to manage risk. So because I invest in exponential things, say Bitcoin and Tesla, if one blows up, I'll be okay because the other one's going to do really well. Maybe both will do really well, but the odds of both blowing up are 0. And that is key. And if you look here, what I would do, you've got 80,000. What I would do is a mix. So Bitcoin or MicroStrategy, depending on what you can get in your different accounts out there, your superannuation fund or whatever they call it in Australia. Get some Tesla and get some Solana and maybe a little bit of a miner like we just discussed. And you can follow my allocations, which are very risky. I shared them all on Patreon. You know exactly how much I have in each. I always share updated allocations on my charts, which have radically changed over the years. And you can take on a lot of risks because you're so young. And I like the fact that you have real estate too, because that means you have your nest egg that will generate perpetual income too. So congratulations again. Next question is from Jazz. Hold on a second. This is another beautiful question that is just warms my heart that people are seeing, kind of asking these great questions. So I bought some options with inspiration from you. So this means it's my synthetic long strategy. I sell a put to buy a call, and I've been doing this my entire life. And I attribute this to being able to retire at a very young age. Now, I've been reading about them, but still trying to figure out the following. With a Tesla synthetic long and a 190 for January 2026 expiry, when is it a good time to buy back the 190 put, if ever? Very good question. Let me give you an example. I have literally hundreds of option positions, synthetic longs across all different strikes. But I just pulled these 2 from my account. This is the January 19th, 2024, $100 put from Meta. I got into Meta in the 90s. I got into a synthetic long. That's currently like a 55 bagger, which means I've made 55 times my money. And you can see here, this is the put that I sold for $19.25. It's now selling for 2 cents, which means it has a 99.95% gain. Now, what I do here, I could have bought that back at half the value, 10% of the value, whatever. But I'd like to wait for it to expire worthless, or at least wait for a year. And then I can get long-term capital gains in the US. I try and avoid short-term capital gains for as much as possible, but I still get a lot of that too. But for big positions like Meta, which has been, that trade unto itself is a life changer for many people. But here I will let it expire worthless, and I plan to exit Meta by the end of the year, and it'll be a long-term capital gain. MicroStrategy, another example, down 99%. Now there's a key factor for these, and I've got so many of these contracts across a whole bunch of strikes that are deep out of the money, that are almost 99% off. Now, when you see something that's deep out of the money, like a put, the amount of I'm having a little brain fart here. The amount of margin you need tied up to secure that put is very little. The higher it goes out of the money, the less you need. So that's not a concern too. Now, if there comes a case like a Black Swan event and I need to free up some margin, I can buy these back for pennies. And that frees up literally, I won't tell you the amount, but a huge amount of money that I have on tap by just closing these positions. But again, I've got lots of margin, and that's why I do my 80-20 bag. So that's what I do. My personal style, let them get to long-term capital gains, which means a year plus, or let them expire worthless, or close them out. So that's my focus. Next question from X1. It's awesome to hear and read about the IA indicators, such helpful tools. Are you planning on a Black Friday sale for the indicators by any chance? That sure would help me try them out. So we normally don't do sales at all on these things because there's a lot of manual work behind the scenes to add people to an account, customer service, developer time, etc. But because there's so much demand, what we're going to do is, we did it briefly before, but it was only for a month. And I think people need at least 2 months to get familiar with the tools, wrap their heads around the tools. So what we're going to do is, due to popular demand, we will do a Black Friday sale for a few days. I think it's going to start tomorrow. Correct me on that, team behind me. But we'll give people 2 months to get used to tools and work. I have to stress this, work within community support on Discourse to get support, learn from others, and dial in the capabilities. We just try as much as possible, cover costs. Many of the products we have built are massively loss-making because there's no adoption. But again, they are really helpful tools if you can wrap your head around them. Now we've got a tool for every type of use case, every type of person, every type of style, every type of investing goal. So get familiar with that as well. And again, the extended familiarization period will help you generate a lot of alpha. And especially during these disruptive times in the next 18 months, it's going to be very, very important to have these tools, which are built exactly for this type of scenario. So yeah, check out the community as well. Next question from Pigeon Doc. Can you take a fresh look at the Solana projects? I remember last year, maybe a little longer, where nothing looked exciting. Seems Raydium has held in there and there remains quick and reliable through the Phantom wallet. So first of all, I look at these all the time. I've been looking at them for years, and yeah, they're very interesting projects. Let me talk about Raydium, for example. This was just retweeted by Toli. Shout out to Mike for sharing with me right before the stream. But the Solana ecosystem just hit another all-time high in DEX volumes this week. It passed Binance Smart Chain and it passed Polygon. It's just behind Arbitrum right now, and it's 1/3 of Ethereum volume. This is what I've been talking about for years. The black hole, the best, cheapest, fastest, most secure chain will garner all the volume. When people are sick and tired of paying fees on other chains like ETH, they'll sniff out another way to go, even if whatever it takes. But if you look at the growth here, this is S-curve growth, and it's just beginning. And yes, Raydium is crushing it. It's purple here in this line here, and it has exceeded Raydium previous all-time highs as well. Now, there are, however, a little bit of bad news. This is Raydium on the Crypto Compendium. I highlighted it on the Crypto Compendium and added a little red circle so you can see where it stands. The Crypto Compendium score is around 3, and that's no good. My threshold is around 6.25, 6.5, 6, depending on the actual space. If you're not a pristine asset, you will not get my money. It's that simple. So yes, the projects are great, but the tokenomics keep me out because they can prevent kind of a lot of upside gains or have other things associated like centralization risk, inflation risk, whale ownership, you name it. Things like that give me pause. And again, I'll say this again, be in the top 1 or 2% of assets. Do not mess around with ones that are not, because there's so much money to be made. Why risk? Why risk things? We'll talk more about risk in a minute too. LL Money just joined Patreon. Amazed by the content. Thank you so much. We have a couple of new members as well. Must be a bull market. I have accumulated 1.65 Bitcoin since mid-2020. No alts whatsoever. I was surprised when I saw your SOL allocation percentage. I plan to swap some of my Bitcoin to alts as we're entering the bull. what would be your suggestion on how to approach this to mitigate risk yet maximize ROI? Well, first of all, check the pair trading example I just went through as well of Binance into other stocks, but that can be done for crypto too. Make sure you have a process and make sure you have a system. And regarding my Sol position, you know from this channel from the last 3 years, my goal was always to find the ETH killer, number one. Second, to equate my ETH bag size to the ETH killer bag size. Well, I literally have bought 0 ETH since March 2020. Literally, maybe 1 or 2. That's it. I bought them all in one day with a certain amount of money. And that's how I do. That was classic running into a burning building. And that's kind of my style, and it pays off. Now, not only have I, like a year ago or even less, Solana was 5% of my crypto. And now it's completely smoked my ETH bag. It's more than twice the size. And the Solana position is now over 62% of my Bitcoin bag, which I've been accumulating since 2017. So that shows you how, getting on the right train at the right time, running into burning buildings, can completely destroy your allocations, which is a bad thing too. So I would consider myself overweight Solana, but I'm also extremely bullish on it. And this is the danger of something that 5x's real fast. So it's gone way higher, way faster than expected. So my advice to you would be, yes, get some alts for sure. Don't be all Bitcoin, because alts will perform much faster. But watch for the winners. I own 5 crypto. It's Bitcoin, it's Solana. And this is it ranked in order of size of position. It's Ethereum, it's Injective, and it's Render. That's it. Only 5. And I actually feel uncomfortable having so many. But the allocations towards Injective and Render are small. My big 3 are always my big 3, and that's always how I do things in 3s. But remember, avoid the losers. A lot of people now are getting kind of weird FOMO where they want to buy crazy risky things. They want to go way out in the risk curve. They want to buy token ranked 1756 on CMC. I don't do that. Stick with the winners. When you know something's going to 3x the return of Bitcoin and Bitcoin's going to do really well, that's all you need to do. So watch your risk reward. Make sure that if you are investing in something that's not Bitcoin, make sure, it's going to be riskier, of course, but make sure the risk reward crushes Bitcoin returns. Otherwise, you're wasting. The other thing to consider too is watch when alt season comes right now. This is where we are in terms of alt season, and you can see it's Bitcoin season still. Now, some of the alts have completely crushed it this year, but remember, 98% won't. But when alt season does come, even the crappy tokens will rise. So be ready for that too. So tune in, find the best assets, wait for them to be beat down. Look at the pair charts as well, like Bitcoin versus whatever crypto token, or crypto token divided by Bitcoin. Get familiar with the pairs. This has become a whole pair video, but it's very important. So I hope that helps. Next question is from PTV. What is needed for the best Bitcoin miners to stay alive after the halving event? Is it possible to do a prediction? Yes, well, I have done a prediction. So this is an analysis of which miners will be profitable at a Bitcoin price after the halving of $70,000. At the time when I did this, Bitcoin was 35K. So I assumed if Bitcoin price doubles in May 2024, which of these miners will be profitable given their current overhead, their debt levels, their hash rate, the price of Bitcoin, their cost of electricity, the age of their rigs, all that type of stuff. And you can see here, there are only 4 that can do this. Remember, this doesn't mean that they are the best investments, but this is just who could survive. Now, miners can survive if they keep on issuing stock, if they keep on taking on more debt, whatever else, they can still, mine Bitcoin at a loss, because that's what they're doing today. There's very few miners are actually making a profit today. But I'd look very carefully at some of these names. CleanSpark, in full disclosure, I own it. Riot and TeraWolf, I think Riot gets special energy credits. TeraWolf uses nuclear energy, which is cheap. And they have, the trend across these is having access to cheap energy, which gives them a big edge, and having low debt profiles to some extent. Iris is in there too, and others are close. Argo is close, Digihost is close, DMG is close. But if you look at things like Core and Cypher, etc., they need to really update their kind of cost structure, capital structure. So be very careful with the miners. Make sure your allocation is small. They're very speculative. It's a cutthroat business. Don't go all in on miners, but it's good having, less than 10% of your, say, Bitcoin allocation in a proxy one or another. So that's kind of what I do. Next is from Mr. Rune. You already mentioned that you wanted to flip your ETH into SOL, but you didn't do it because of risk management purposes. Do you think it's a good idea to take the ETH profits and put it in Bitcoin in the upcoming cycle, or will you let it ride and hold it long term? So this has been one of the things that I debate myself every single day. It's like, yeah, I knew Solana would outperform ETH, but I also knew I would be able to equate my bags, and I have very strict rules around allocation, and I've already blown that out of the water. So my Solana is more than twice my ETH now at this stage, last I looked. So this is a problem. But what really, I'm afraid of too much portfolio concentration. Again, not only do I like to mix it up between disruptive asset classes, but also not to have too much concentration in one in case it blows up. Now, ETH is still doing okay. It's not doing 500%, but still up, 70% for the year. So, you don't go broke making profits. And if I was to pivot my ETH into SOL, that would make my SOL position far higher than my Bitcoin position. So your question is, should I pivot it into Bitcoin? I'm not sure. I think ETH has to catch up. I think selling here is at a low, especially if you look at the ETH Bitcoin chart. Therefore, I am holding for now. Also, remember, too much concentration. I have to stress this. In any one asset violates my rules of risk allocation. I already take on crazy risk, but again, that's just me for now. So my goals are not your goals, but be careful. I'm already heavily concentrated in 3 big positions for crypto. ETH is not bad. It's not a high flyer. It's not the consensus trade, but it's a safe trade. And when the ETH ETF funds come, I think it'll do very well. I do see it getting back to $4,000, $5,000 in this bull run. Next question. Can you have a look at the growth and adoption of ThorChain Rune? How much it has grown since the last cycle, and if it has gotten any better since your Should I Buy video? Yes, Fiza, I did a Should I Buy on Rune, and I had a price target of $3 to buy it. I liked it. I thought it was very special, and this is back in 2021. I really liked the project and chain, and I had a limit order back in the last bull market, and I missed it by a penny. It fell as low as $3.02. My limit order is $3.01. Missed it by a penny. So it's not that it's bad, it's good. In fact, let me show you why it's so good. These are the Rune fees. You can see here a couple of quick little metrics. First, the fully diluted market cap is about $2.87 billion, which is big. Anything above $1 billion is very big. The amount of fees annualized is about 12.25 million. So what I did was, again, I'm a TradFi guy. I calculated a PE ratio of kind of earnings to actual market cap, just for perspective. Of course, people say crypto is different, but at the end of the day, it's not. Follow the money. You want chains that make money. This, again, drives price action. So if you imagine they do earn 12.25 million a year, they have a fully diluted market cap of 2.874. They're growing very fast. Therefore, a PE of $234 is very good for this asset. In this case, another way to think about it is investors are paying about $234 for every dollar of earnings. That's the simple way to think about it. And yes, It is incredible. I don't own it. I have very little room in my stable. I don't want to own 10 things or 60 things like other people do. I much prefer having extreme focus. So with that, yeah, Rune is good and it's valuable. And in fact, the next case will talk about how valuable Rune is compared to other assets. This question from Goldie26, what are your thoughts about Litecoin? Well, this is what I call the Valley of Death. Okay, these are kind of some of the chains here. You can see here Litecoin in terms of daily fees is alongside EOS, Bitcoin Cash, Ethereum Classic. This is the Valley of Death. Monero even. You can't have a chain like Litecoin with a market cap of 5.2 billion. That's twice what Rune has. But it's got a price to sales ratio of 14,672. And just to give you an analog, the average price to sale ratio for the Fortune 500 is 2.45. So it's ridiculous. So would I own Litecoin? No, not at this valuation. Can they get Rune type returns like this, a P at 234? I doubt it. Let's look at the chart as well. Yeah, 2 peaks, maybe 3. There was a little peak recently as well because of the halving, a lot of excitement around the Litecoin halving, and then it faded off. And if you look at the crypto compendium score, there are certain things we don't like about it, heavy whale concentrations, etc. I would not own it. And by the way, this reminds me of the XRP chart. Will it ever get back to all-time highs? I doubt it, especially with these pathetic fees. Pathetic fees means no adoption. It's a minor game. That's it. I would get out. Not financial advice, but I've never owned Litecoin. Never would. Next question is from Cash Q8. Like Solana, the token Neon for Ethereum Virtual Machine project running on Solana has pumped 365% over the last month. Any thoughts on adding this compendium score? Full disclosure, I bought a small holding. Well done. So I'll just show you very quickly what I see on Neon, EVM. Yes, things pump. Everything pumps. There are things that pump for no reason. Things that pump because they're pumped by pumpers. But here, the red flags are the self-reported circulating. I hate that. I don't trust self-reported stuff. Also, total supply, 1 billion. They're currently at 19 million. You're just going to go into a buzzsaw of dilution over time. And that's all you need to look for. Anytime you see a little hazard sign on CoinMarketCap, it's a hazard. It's that simple, everybody. Tesla Bull and Anderson W, thank you so much for coming. So me, I don't like to throw money away. I like to win. I like to be in winners. It's that simple. Be careful out there. Yes, it might do well. Yes, it might get adoption. Yes, the Solana ecosystem is good, like we saw with Raydium and DEX volumes, etc. But at the same time, you gotta look at the compendium scores and the tokenomics. So important. There are faster horses. Next, from Tango, your AI model update Patreon post was interesting, but it left me wondering where you specifically see the world in 2, 5, and 10 years, not just economically, but culturally. And how will the human role in the world change over the next 10 years as a result of the AI revolution? Well, sadly, I am very obsessed with AI and thinking. One of the things that makes me a good investor is I study. I'm not a futurist, but I try to study where the puck is going to be in the future, because that has worked really well for me in investing. And that's why I obsess about trends that impact life and the world and everything else. So this are a couple of things. We are going to see radical changes like we've never seen before. I am concerned about many of them. I am concerned about bots and automation and the fact that many jobs will go away over time. We are mixing our real world with the digital world. There will be new types of art and entertainment. There'll be new ways to interact with each other. Also, there's lots of good stuff that comes with it. So I always tell people to embrace AI because it'll make learning more personal and accessible, and it'll help people reach their full potential. But the key is to do things that AI cannot do. We'll talk about those in a second. But work will change, and if people are not equipped to pivot their skills to be able to leverage AI, excuse me, it's not going to be good. Also, AI is going to destroy any job a bot can do. You've got Tesla are building cars that can be assembled without fasteners by a bot. It's by no chance they've done this. A bot can lift up something, slot it in somewhere perfectly, and do it 24 hours a day. That means jobs that you see on the General Motors factory floor will no longer be needed. Many jobs will disappear, whether it's making coffees or flipping burgers or assembling vehicles or gardening or whatever else. It's going to change radically. Now, it'll help the economy grow and make more money, but not everybody will benefit from those changes. The people that own the bots will benefit. That's why I say position yourself in the biggest AI company on the planet, which is Tesla. And I hear the groans, all the Tesla haters. It's like, yeah, just, you don't have to like the asset you invest in, but position yourself for success. You got to be on the right side of this revolution. Now, in terms of your question, a couple of things, and again, this is a very short list. Education, for example, I think educators will be, they need to pivot themselves. And we probably have a lot of teachers in the audience. People call me a teacher, but I need to focus on fostering critical thinking and creativity and building models and things like teachers need to help people understand emotional intelligence. I focus a lot on helping people understand their psychological blind spots when it comes to investing. That is probably the most important thing people can learn. And AI tools will help people learn whatever they want, but teachers, humans, will still be needed to focus on that critical thinking, first principles, creativity. I keep on stressing creativity and emotional intelligence. That's where the play should be. In healthcare, AI will diagnose better than doctors, and it'll create treatment plans better than doctors. It can access research like nothing before. Humans need to focus on empathy, helping patients deal with illnesses. Art, whether that's music or poetry or writing or whatever else, AI can serve as an innovative artistic tool, but that is the whole art area is an area, like when I don't want to go down that path, so I don't want to offend anybody, but art will radically change, but you've got to be on the side of AI and leverage it to create your new art. Very important. Science. AI will speed up discoveries, whether it's cures for cancer and everything else. It's going to radically change everything. Maybe it could be a battery makeup of different materials to optimize power to weight and leadership. This could work for governments too. AI can offer data-driven insights into ethical judgment. Also analyze history. Like, it's so funny. If you're a student of history, and it's so important, you can see the mistakes that political leaders are making today. And they should know history, but they don't. So that's a couple of things. And, I've done a lot of videos in AI and how it is both a threat and an opportunity. Study it, embrace it, and be on the opportunity side. Do not run from AI. Do not be afraid of it. Embrace it. Next, and a shout out as well to our Patreon member, Dr. Chris. He had a cool story with us. I was chatting with him, I think, on Discord last night, or Discourse, I can't remember. But Dr. Chris and his family had to go through several interview processes in order to adopt their furry friend Athena. Athena, by the way, is the goddess of knowledge in Greece, as far as I remember from being in Athens as a child. And it's part of the Fur Friends Rescue, so we donated them today. They made sure that Athena went to a very good home. And thank you for all you do, Fur Friends, and for the pets you need. And thank you, Dr. Chris, for the suggestion. And Athena, you're beautiful. And thank you, everybody. Sorry for being not too well today, but I hope you learned something. Hit the like on the way out. A long video, but tons of information. Don't forget to subscribe if you want to make it in this AI revolution. Thank you, everybody. See you all later. Thank you to the mods in the chat. And catch you tomorrow morning. Bye-bye. Thank you, Dr. Chris. You're there. You're so good. Good night, everybody. good day, good afternoon.